Good evening, everybody. We do apologize. We had a bit of a technical glitch there, but we are live right now. We do apologize again for yesterday. Yesterday we had power outage. There was heavy storms here in Johannesburg, South Africa, but we are here today. We are live and we are going to have this session, and you guys are going to have one that you know has been struggling with emotions in trading, has been struggling with trading psychology. Share this link with them, share this webinar with them, and let them join us this evening, as this is going to be a power packed session, and you guys are going to learn so much this evening. Share this link. I'm going to give you guys a bit of a few seconds to share this link on your WhatsApp, on your Instagram, on your Twitter, on your Telegram groups, on your WhatsApp groups. Share it everywhere with everyone. Let them come and join us so we can have fun. Today we are discussing one of the most important aspect of trading, which is usually the rise or the downfall of traders, and that is trading psychology, or mastering your emotions in trading. You do not want to miss anything. Stay up until the end. All right, so let's get right down to it. All right, so just to give you a bit of a background, if this is your first time joining us, let me just tell you a bit about Octa. All right, the priorities of Octa. All right, the goal of Octa is to ensure that you as a trader have every advantage possible to succeed in the Forex market. Octa has over 21 million clients in over 180 countries, and they have been in the market just over 12 years, and they've won over 60 industry awards. Isn't that amazing? So just to let you know that we are in good hands. You are in good hands when you're trading with Octa. All right, let's move on. Before I proceed, again, I just want to say a disclaimer. Any opinion, any news, research, prices, analysis, or other information discussed in this webinar or linked to this presentation is provided as general market commentary and does not constitute as investment advice. If you do seek any investment advice or financial advice, please do speak to a regulated entity or a regulated key individual that is registered with the FSCA or a regulatory body that is in your country. All right. Are you with me? All right, let's get to it. Let's get to it. All right. All right, please just give me just 1 second. I just need to sort out something real quick. Let's do not disturb. Let's put that on, and that's right. All right. That's sorted. Please do forgive me for that. Just wanted to make sure I turn off all my notifications so you don't see any of my secrets pop up while we're busy teaching. I do apologize for that. Let's move on. All right. For those of you that are joining me for the first time, please do let me know where you are tuning in from. Please do let me know which country you are tuning in from, which city, and whether you're a beginner, and some of the challenges that you have been facing in trading, especially related to emotions in trading. Write them in the comment section, engage with me, ask me questions, and then I will make sure that I answer your questions and you live here a better emotionally trader. That's if there is a word like that. I hope there is, but I hope by the end of the session you're going to be a master of trading psychology. All right, so just to give you a bit of background about myself, my name is Isaac Izy, and I am a graduate in business management and entrepreneurship. I've also done business principles and practices in Varsity College. I am also a holder of certified sales regulated by Meseta. I am a professional Forex trader with a decade of experience, and I am the founder of the Forex Trading Academy with over 5,000 students, and we have held over 300 Forex seminars throughout the Southern African region. All right, today, as I said, we're discussing one of the most important aspect of trading. Most of the important aspect of trading, which is understanding trading psychology. I see we have Mereke from Centurion, we have Rajev from India. All right, let's get right down to it. So today I want us to discuss what I want us to discuss today is I want us to discuss the importance of trading psychology. All right, successful trading is not just about analyzing the charts and data, it's also about mastering your emotions. There is a lot of statistics that some say trading psychology is 90%, it makes up 90% of trading success. Others say it's 80%, others say it's about 75%, but bottom line is that trading psychology plays a huge role, a major role in your success as a trader. And today we're going to be discussing the 4 key psychological challenges or psychology issues that most traders fail, namely fear, greed, impatience, revenge. All right, fear, greed, impatience, and revenge. This is the 4 key issues that most traders battle with when it comes to trading. All right, so let's get right down to it. Tell me if you've had any issues with fear. For most people, it's the fear of missing out. For most people is greed. They get overly confident and they become too greedy. Other people is they are too impatient. They cannot wait to for a setup to pop up. They enter too early, or they are too impatient to hold throughout the losses, or they are impatient to hold profitable trades and they close too early. Tell me what challenges you are facing. For others, it's revenge trading, especially on days like today where we have high impact news like the CPI. When people blow their accounts or lose a trade, they tend to revenge trade and they just go back trying to recover their money. Do let me know if you are struggling with any of those. Let me know in the comment section. Let's chat. All right, mine is 4 right now. Now I'm scared to trade. All right. My first day of trading on Octa. All right, I see we have quite a lot of people here. Let's get right down to it now. Let's talk fear. Let's discuss fear. All right. Number one, what I want you guys to understand in trading psychology is that fear in trading is a paralyzing emotion. All right. Fear can lead you to be hesitant. It can cause you to miss opportunities, and then it can paralyze your trading. All right. Fear is a paralyzing emotion. Most of the time, what will fear do? It will cause you to be hesitant. You see a trade, you want to jump into the trade, but fear kicks in. What if I'm wrong? You remember you have the trauma of the trades that you've lost before. That trauma kicks in. It's like PTSD. It kicks in, and then you remember those losses. All right, or either it's your last money, you have no business having that money in the trading account, so fear causes you to be hesitant. Most of the time you come back and then you realize, wow, my analysis were correct and I've missed these great opportunities. All right, and then again, as we said, it's a paralyzing emotion. You can see what is happening, but for some reason, like someone who is paralyzed, you either cannot press the buy or the sell button. You just literally just freeze. It paralyzes you. All right. Fear in trading. It is dangerous. I see someone saying the fear of making mistakes. Yes, the fear of making mistakes, because we as people, we don't want to fail. We don't want to be wrong. All right, so fear can also kick in. It is a paralyzing emotion. We're going to be discussing how to overcome fear. All right, now let's look at an example of missing opportunities because of fear. So for instance here, we had an uptrend on gold and we see the market breaking the trend line, and as you know that they're breaking in a retest of a trend line, it means literally that there is a change of direction in the market. And then what happens, you even get a good candlestick confirmation there of an engulfing candlestick pattern, and then what happens, the market shoots. But because you were afraid, you didn't take that opportunity. You missed out on that opportunity. All right, that's what fear does to a lot of people. Oh, what if it will still go up? All right, just to answer you, Mereki, I want you to understand that trading is a business of probabilities, not a business of certainties. We don't trade that for sure, right? It's not a buy or a sell for sure. It's a probability, all right? Which is why risk management comes into play in case you are wrong, all right? Successful trading is not the absence of losses, but it is the ability to manage those losses so that your wins are much more than your losses, all right? The fear of missing opportunities. One, that is fear. Number two is greed. Let's discuss this demon called greed, all right? Greed in trading is insatiable desire for more profits, all right? It's just this unrealistic desire, this desire for unrealistic returns, all right? And greed can lead you to overtrading, all right? It can lead you to ignore risk management, and then it can have you chasing unrealistic high returns, all right? An example is a trader. Most traders, they increase their position size excessively in a pursuit of higher profits, leading to significant losses, all right? And again, for days like today where there is CPI or there's NFP, you find most traders over leveraging their account, using massive lot sizes just because they want to make massive profits, all right? So greed is the one thing that leads you to overtrade, that makes you to ignore your risk management and have you chasing unrealistic high returns, all right? It is the desire for more profits. You just never have enough, all right? You're always wanting more. You're always wanting more. Even if you hit a good trade, you feel like I should, even if you had a good winning streak, you just feel like I should keep going more, and eventually you end up losing all that money. And I'm sure a lot of you have done this. You've traded a small account, you grew it to quite a good reasonable amount, and then because greed kicked in, you figured if I increase my lot size, maybe I will make more money, and it takes that one trade to wipe off everything. Let me know some of your experiences with greed, where greed has caused you to blow your account. Please let me know in the comment section. Let's move on. So for instance, let's see this one, all right? And also another thing that causes people not to use stop losses and all of that is because of greed, all right? So let's get right down to it. So we see, for instance, here, we had a buying trade into, or we wanted to buy gold, and then what did the market do? Boom. Went to the downside, all right? The market eventually went up a bit, but we didn't take our profit there because greed, all right? Greed didn't allow us to take that profit, and then eventually the market came back to hit our stop loss, all right? I'm sure this has happened to you. Most of people got into a trade, they didn't close the trade because they were not happy with their profits because of greed, and they didn't even put a break even, nothing, just greed, and the market turned against you and wiped you out, all right? Number three, impatience in trading. Impatience is the lack of discipline and patience, all right? Impatience is not just the lack of patience, but it is the lack of discipline and patience, all right? Impatience can result in premature exits, impulsive decisions, and a lack of adherence to trading plans, all right? A lot of traders suffer because of this, all right? And this works hand in hand with what? With fear, all right? hand in hand with fear. I see Emmanuel says, I'm facing it right now. I just stopped staking position because I noticed it made me greedy and I don't have enough capital to hold the stake position. Exactly my point. And I hope by the end of today, we are going to stop all of that. All right. Now let's discuss impatience. All right. What happens most of the time is so patience, as I always say, is a virtue in trading. One of the most important characteristics or traits that you need to have in trading. So in trading, you need patience before you enter the trade. You need patience during the trade, and you need patience after the trade. All right, let me explain that. One, you need the patience to wait for the right setup that has a high probability of going in your direction. Number two, you need the patience to hold for the trade to get to your desired take profit or your desired level. All right. And number three, after the trade, you need the patience to wait for another opportunity. All right. So now let's discuss the first one. What happens is, you're analyzing the market and price action is telling you we are bullish. However, instead of you waiting for a retracement, all right, instead of you waiting for a retracement for the market to create a higher low and then you can enter your buy position, you catch it right at a higher high because you are impatient. You are impatient to wait for the market to give you a proper entry point. You enter there high, the market drops, it kicks you out. All right. Number two, the patience needed during a trade. What happens most of the time is all right, is that you get into a trade. All right, you get into a trade, you analyze a trade correctly, and I'm sure a lot of you have done this. Analyze a trade correctly, you get into the trade, and then what happens? You see a little bit of profit, and then you are so impatient to wait for the market to get to your TP and you close too early. Sometimes I suffer from that as well. Because of my busy schedules, I just want to see the profit, I just want to see my desired profits now. And if I don't see it and I have other commitments, sometimes I don't wait for the market to get to my TP. I'll just close prematurely, come back, and the market has hit my TP and I feel so bad. And I'm sure you do feel that as well. All right. So most traders, they exit their trades prematurely because they can't wait for the planned profit target, missing out on potential gains. All right. And number three, the patience after the trade. Most of the time as traders, especially if a trade hits our stop loss, is that we are not patient to wait for the next opportunity. We are too quick to jump into the market right again because we want to revenge trade, which leads us to our next one. All right. As you can see over here with this example on gold, we had a selling position there, closed too early. The market went all the way down. We had another selling a trade there, the market went down, closed too early, missed out on all of those pips. Same thing happened here. Look at all these trades. Imagine if you had held all these three trades from all the way up there at 1846 all the way to 1830. See how many pips is that? Beautiful trade. But because we were not patient, we missed out on those trades. So impatience is one of the most dangerous cancers to traders. And number four is a revenge trading. All right, revenge trading is an emotional reaction to losses. All right, like the example I just gave you, the market hits your stop loss without you even analyzing. You just want to jump right back into the market. All right, revenge can lead to chasing losses, irrational decision making, and increased risk. And I'm sure a lot of you have done this. The market hits your stop loss, and market after hitting your stop loss, what do? You jump right back in. You increase your lot size. You are angry. You just want to make your money back. You were in a sell. The market hits your stop loss. You enter a buy because you are just so confused. You don't even analyze anymore. All right. Revenge in trading. These are the four things that kill traders when it comes to the main core things that kill traders. Number one is fear. All right. Number two is impatience. All right. And number three is revenge. Let's get right back to it. All right. We have fear, We have greed, we have impatience, and then we have revenge trading. The four keys that kill a lot of traders. All right. So for instance, like I said, I gave an example over here. We can see we entered a buy, then what did the market? The market went all the way down. What did we do? We just jumped right back in. No price action whatsoever here. What did we just revenge trading? You can see this trade here was taken, no analysis whatsoever. You can see that trade there, no analysis whatsoever. All right. So that's what revenge trading is about. All right. Now we're going to discuss the impact of emotions on trading decisions. The impact of emotions on trading decisions. All right. Emotions can cloud judgment and lead to irrational trading decisions. All right. And can I just tell you guys before we even proceed? I see a lot of people. I see someone asking me, are you going to analyze gold today? As we said, technical analysis is just a small portion to trading. And I do not understand, and I remember I said this in an interview, that it's quite amazing how ignorant people can be, that if we say 90% of the important thing is psychology, but most people are chasing the 10%. All right. This is the most important session you will ever have. All right. The most important trading session you will ever have, over and above the strategies. You can have all the strategies in the world, but if you don't understand the impact of emotions on your trading decisions, you will have a strategy that is 99% accurate, and you will still be blowing accounts each and every day and not making money, and you will be frustrated. Why? Because you choose ignorance. The gap between you and your success is information, is knowledge, and this is the information that you need. This is the most important session you will ever attend, that is important to your trading career. So take this thing very serious. All right. Emotions can cloud judgment and lead to irrational trading decisions. For you to become a successful trader, you need to be a trader that is disciplined, that is emotionally disciplined. All right. You need to make sober decisions at all times, because your decisions cost money. As a trader, your decisions are very expensive. They cost money. So you don't want to make irrational decisions. You want to make sober, calculated decisions at all times. You need to calculate the cost of your decisions every single time, and emotions can lead to irrational trading decisions. All right. Strategies for maintaining a balanced mindset. All right. Strategies to maintain a balanced mindset. They say a man who cannot conquer his mind will be conquered by his mind. A man who cannot conquer his mind will be conquered by his mind. Others say a man who cannot conquer himself, he will be conquered by self. All right. So today I want to teach you how to maintain a balanced mindset. I see this is actually the main key towards trading. Most of us are actually gambling in the Forex market and not trading. We are traders, for God's sake, not gamblers. I do agree with you, Michael. And for those that are always chasing analysis, please just know that you are no different from a gambler. If you really want to be a professional trader, this is what you should be learning. Everything else will come after. If you don't have this, unfortunately, I can guarantee you, I can even put my money on it, that you will not be successful. So let's pay attention to this. So today, strategies for maintaining a balanced mindset. Number one is practical strategies to manage and overcome trading psychological challenges. We're going to discuss that. We're going to discuss strategies like mindfulness, meditation, journaling to control emotions, a well-defined trading plan with clear entry and exit tools. I see Michael saying, how I wish I had known all this before blowing up most of my money in the past. Yes, unfortunately, Michael, for most people, they learn when it's too late rather than early. It's one thing that I always say, that a foolish man does in the end what the wise man does in the beginning. All right, so as an individual, you need to decide where you fall in. Are you gonna fall in the category of the foolish people? Are you gonna fall in the category of the wise people? Because wise people do what they have to do in the beginning, while foolish people try to do what should have been done in the beginning. They try to do it in the end. All right, and as for you, Michael, it's never too late to fix your mistake. This is why you are here today, so you never repeat the same mistakes. All right, practical strategies to manage and overcome trading psychology challenges. All right, so now let's talk fear. What are some of the practical challenges that you need to What are some of the practical strategies to manage and overcome trading psychology challenges? Number one, what is practical strategies to manage your fear? Number one, never trade with money that you cannot afford to lose. Never trade with money that you cannot afford to lose. All right, that's number one. Whenever you have your last money and it's supposed to go to your rent, it's supposed to pay for your car or your children's school fees, do not put that money in Forex. All right, fear is gonna kick in because there is a responsibility attached to that money. And whenever you place a trade, that responsibility pops up and then it triggers fear. All right, so you'll end up making foolish mistakes. All right. Number two is, especially after you've taken a series of losses, take a break from trading. All right, take a break from trading, maybe for a couple of days, and just get over, mourn the losses. All right, because if you especially if you took a big loss, if you take a huge loss and you try to go back into the market, like I said, the trauma of that loss will haunt you. All right, whenever you open a trading account, it will, I promise you, whenever you open a trade, that trauma will kick in. All right, so number one, I said, don't use money you cannot afford to lose, especially if it's tied to another responsibility. Number two is, especially after taking a huge loss, please take a break from the market. All right, take a break from the market. Number three, all right, number three on how, especially how to overcome fear. Number three on how to overcome fear is surround yourself with professional traders. Surround yourself with professional traders. Be in a community of other professional traders. What will then do? It will also encourage you. It will motivate you when you see what they are doing, when they take in that trade and they validate what you guys are seeing, and you guys have a community. Then you are able to learn how to overcome those challenges. Even when you feel like you are afraid, they can tell you, okay, please, let's just hold this trade for a while. Or no, let's not take this trade. All right, so you need that encouragement. You need to have a positive trading community around you, be it online or be it in person. Make sure that you are part of a positive, and keyword is positive, trading community. You do not want to be in a community of gamblers, of people who don't know what they are doing. That's just going to instill more fear to you. All right. All right, so number one, we said, how do you deal with fear? Is you never trade with money that's tied to another responsibility that you cannot afford to lose. Number two, what did we say? All right, we said you surround yourself with professional traders. Surround yourself with a positive trading community. All right, surround yourself. Oh, that's actually number three. But number two is that whenever you take a huge knock in the market, please take a break from the market for a few days so you can mourn and get over that loss, so you come back thinking, soberly. So, all right, number two, let's discuss other strategies that you can use to overcome. So we've discussed fear. Now let's get to greed. How do you deal with greed? Practical strategies to manage and overcome greed. It's actually fun. I was having this conversation with one of our students today, and I said, for most people, they need to understand that greed is not something that you can ever run away from. All right, you need to learn to manage it. People are wired, it's in our nature to just want more. but there is strategies that you can use to overcome and manage greed. And number one, I will say, have two accounts. All right, have two accounts. Have your professional trading accounts where you follow strict risk management rules. All right, and for especially people that just cannot overcome their greed. All right, people like that need to have two accounts. Number one, how do you overcome greed? You take one account, you apply strict risk management rules, and then you have your greed account. I call it greed account. All right, this is an account where you say whenever greed wants to kick in and deters you from from following your risk management rules, do that trade, take that trade, or increase that lot size on your greed account. All right, and this is what's going to happen over time. You will realize that following risk management rules, it's more peaceful than the greed account, and eventually you're going to drop this account. Eventually, I can promise you, because you will know that ultimately greed does not pay. All right, and it works, because if I just tell you don't be greedy, most people don't listen. But if you experience it yourself, you see the beauty of the two sides when you follow risk management and when you don't, and you compare. You yourself, if you are wise enough, you will eventually see the longevity of following risk management and how peaceful it is, and you actually enjoy, and then how just useless greed is. And eventually you will learn to drop greed slowly and gradually. That's number one on how to deal with greed. And I think pretty much for everyone that's here, if you are struggling with greed, follow that route. Follow that route. Let's come and talk again in 3 months, and you will let me know, Isaac, I don't struggle with greed anymore. I've actually learned that it does not pay. All right. So how do you overcome greed? Have two accounts. Have an account where you follow strict risk management rules, and have an account where you can feed your greed. All right. Whenever greed arises and you feel you want to be greedy, just open your greed account, take that trade, and then let's see what happens. Eventually, you will know that greed does not pay, and proper risk management is one of the key elements to your financial success in trading. All right. Impatience. All right. Impatience goes hand in hand with fear, right? And I'm gonna say the same things that I said with fear. You just need to surround yourself with positive community of traders, a positive trading community. Please make sure that you are part of a community. All right, no man is an island, and we can never really truly achieve success alone. You need to be with like-minded people. So how do you overcome impatience? You surround yourself with positive traders, especially professional traders. All right, and learn what they do. Watch what they do. All right, you watch what they do. All right. Number two is have a set of rules. Always ask yourself whenever you trade, whenever you want to take a trade, is this more important? All right, is this decision more important? And what do I mean by that? Is that most of the time, whenever we take irrational decisions, we don't understand the cost of the decision that we take, and we don't realize how unimportant that thing that we are doing is. All right. So whenever you feel like you're being impatient, just ask yourself, this trade, this decision that I'm about to, is it really important for me to take this trade? Just think about it. Ask yourself, is it really important for me to take this trade? And you'll find most of the time the answer is no. And if the answer is no, and you've come to that realization yourself, then you don't take that trade. All right? Ask yourself this question, and this applies to everything in life. Whenever you make, is this more important? Is it really important for me to do this? All right. Are we together? So number one, I said you surround yourself with you get yourself a positive trading community. Number two is just ask yourself the question, is it important? Can I see you guys asking in the comment section, is it important? All right, is it important? So we've dealt with fear, we've dealt with greed, we've dealt with impatience, and we've dealt with revenge trade. Revenge trade, pretty much similar to impatience. Is it really important for me to do this? All right. Revenge trade. How do you overcome revenge trade? One is you need to have strict risk management rules. All right. The best way to overcome revenge trading is to be happy with the losses before you open the trade. All right. You need to be okay with the loss before you press the buy or sell button. All right. The reason why we revenge trade is because one, we did not calculate how much we will lose. Two, we were not happy with taking that loss. Three, we were not supposed to even put that money in the market to begin with. That's why we revenge trade. But then if you have a strict risk management rules and you know that one is I am happy with taking this loss if the trade goes against me. Number two, I can afford to lose this money. I have calculated how much and I've applied proper risk management rules. Then you will not revenge trade. All right, because if the market goes against you, you're already okay with that loss before you even open the trade. All right, so we've dealt with practical strategies to manage the psychological challenges. All right, and obviously we need to talk about mindfulness. We need to talk about meditation. We need to talk about journaling to control your emotions and all of that, of which that we can discuss more on a later stage, all right? But as I said, you need to have a detailed plan with clear, strict risk management rules, with entry and exit rules. You need to have that, all right? When it comes to meditation, what is meditation, all right? Is the state of having control of yourself. Remember, I mentioned that he who does not conquer himself will be conquered by self. When you meditate, when you pray, is taking control of yourself, connecting yourself to God, all right? That you have your spirit is more in control over your mind. Your soul controls, it's the one that leads. It's not your mind that leads your soul. It's your soul that leads your mind. That's the state of meditation. You come to a place of stillness and calmness. All right? That's what we need to start practicing. And how do you practice that? Silence. Shut down the noise. Shut down the noise. Just be in a place of silence. All right? Be in a place of silence and listen. Just listen. Just listen. All right? Connect to your inner self. Connect to your inner being. All right? And you will notice, start gradually. I know for a lot of people they try meditation, and meditation is not the things the all these gestures that they do and postures. No, it's just you can just literally just sit in your room, lay down, or just sit on the floor, switch off the light and just be quiet and just listen. Stop thinking too much. Control. Bring your mind under subject to you. Let it listen to you. Tell it to keep quiet. All right. Do it 10 minutes. Start with 10 minutes a day. Just 10 minutes every single day. 10 minutes. And we are creatures of habit. As you learn to do that more habitually, that increase it to 20 minutes, 30 minutes. If you can get to the point where you are able to meditate for a minimum of 1 hour, I can tell you, you have conquered life. Nothing will ever get to you. If you are able to get to a place where you can meditate for a minimum of 1 hour per day, there is nothing that can get to you. Absolutely nothing that can get to you. All right. Let's move on. I see scale of preference in economists. It's not really important to take some trades except it's an A+. Absolutely. I agree with you, Michael. Beautiful one. Let's talk risk management fundamentals, the keys to successful trading. I'm sorry, I'm just drinking not feeling very well, so I have to take that thing. thing tastes like medicine. It's really bad. But anyway, let's move on. The importance of risk management. Why is it crucial? One, avoiding potential financial losses. Number two, maximizing long-term profitability. And number three, achieving consistency in trading. Why is it crucial that you have strict risk management rules? Is you avoid potential financial losses. All right. For a lot of people, when they got into Forex trading, they were in a better place financially, and when they got into trading, they're in a far worse place in trading. Why? Because of the lack of risk management. I once saw someone saying, before Forex trading I was broke, after Forex trading I was poor. Why? Because there is lack of risk management. All right, so the importance of risk management is avoiding potential financial losses, as maximizing long-term profitability. One of the most important things in trading is longevity. All right, the thing that keeps you profitable is longevity, consistency. All right, consistency. You need to be consistent, even if it's small wins. It's better to have consistent small wins, and you have gradual growth, as opposed to going up today, you down tomorrow, up. No. You need gradual growth. You maximize long-term profitability by adhering to risk management. And like for a person like myself, we were looking at our stats for the year. We did really, really well. We achieved just over 150% of growth in our portfolios. All right, and we look at the growth from the year, the graph is just going nicely. So that doesn't mean that we don't take losses. We do take losses, but because of our strict risk management rules, our growth is so nice and gradual, and it's beautiful to see. All right, and then that's the consistency that you need in trading, and you can only achieve that through risk management. We need more sessions on this topic, trading journal importance. Absolutely, you need to write it down. You need to journal all your trades, and we will get to it. All right. Risk versus reward. In trading, the core principle revolves around balancing risk and reward. The risk-reward ratio is a fundamental metric that guides every trading decision. All right. Are you with me? The risk-reward ratio is a fundamental metric that guides every trading decision. Successful traders strike a balance between the potential profit they target and the risk they are willing to take. It's like what I discussed. You need to know how much you're going to lose before you even enter the buy or the sell. You need to know that. As much as you know how much you want to make, you must know how much you are willing to lose. All right. The risk we assume directly impacts the potential profit we can achieve. It's essential to find equilibrium. May I say something controversial and shocking that a lot of traders will not agree with? All right. I know, especially SMC traders, you guys are always looking at a 1:10 risk to reward ratio. Let me tell you, if you want to be consistent, you need to be realistic. If you need to be consistent, you're talking to someone that's been in trading for 10 years right now, and I know what I'm talking about. I'm not an Instagram trader that just wants to say nice things that sounds cool. I'm talking reality. And I want to talk to you guys that are always talking about 1:14. Look at your results. Your results will tell you that you really have no idea what trading is about. Let me give you a secret to consistency. The best risk to reward ratio is 1:2. 1:2. That's my opinion, and I've seen it work. Most professional traders that I know, that's where they start. 1:2. Why? Because there is a level of confidence that you build when you achieve success. Confidence. When you have a 1:15 and you maybe you do a 30% of that trade, and the market goes against you, you feel like a failure. But if you do 1:2 every single day for at least more than 3 months, every single day you are able to achieve a 1:2 risk to reward ratio trades, and you are hitting take profit back to back, you realize how much confidence that will give you. Then from 1:2 you can move on to 1:3. From 1:3 you move on to 1:4. Gradual growth, guys, gradual growth. No kid is born today and starts running. You first start by crawling. From crawling, you try to stand up. Stand up, you try walking and falling. From walking and falling, you start walking nicely. You get balance. Then eventually you can run. All right? Do not gamble with your future. 1:2 risk to reward ratio builds your confidence as a trader. It builds your confidence as a trader. And if you want to achieve consistency, follow that rule. All right? Let's explain risk to reward ratio for those that who do not know. All right? Let's read the comments. I make profit in 7 days and lose it all in 2 trades. My point exactly. My point is like lack of strict risk management rules. All right, that's my problem. Up today, down tomorrow. Great. I'm glad that you guys are becoming aware of these things, and you can see that it's really a problem, and eventually it's gonna be your demise. So it's important that we have risk management rules. All right. Let's move on. The risk to reward ratio is a critical metric that quantifies the potential gain in relation to the risk taken in a trade. It's calculated by dividing the potential profit by the initial risk. Example of the calculation: if you are risking $100 to make 300, your risk to reward ratio will be 1:3. All right, maintaining a favorable ratio, usually above 1:1, is crucial for long-term trading success. Are you with me? 1:1, 1:2. I strongly suggest you target 1:2 at most 1:2. Risk $1 to make $2. Risk $1 to make $2, or risk $1 to make $1. Risk $1 to make $1. All right. If your strategy allows, risk $1 to make $2. You do that consistently for 3 months. Go back, risk $1 to make $3. Go back, risk $1 to make $4. Build your confidence. If you're playing the long game. You want to play the long game. We're here for a long time, not for a short time. All right. Let's move on. Number 2, setting stop loss orders. Stop loss orders protect your capital by automatically exiting a trade when a specified price level is reached. All right. It is important to set stop loss levels based on analysis, strategy, and risk tolerance. Let me discuss this right here. All right. A lot of you do not know how to set stop losses, and that is why most of the time the market will hit your stop loss and eventually goes in your direction. All right. Let me give you a trick. Most of the time where you want to put your stop loss, that's where your entry should be. Trick number 1, strategy number 1. Most of the time, if your trades are always hitting your stop loss and going into your direction, most of the time where you usually put your stop loss, that's where your entry should be. And we'll discuss that more when we're doing technical analysis. All right, your stop loss. All right. Number 2. All right. A stop loss should be based on your analysis. For instance, if you are buying, all right, if you are buying, your stop loss should be at the previous low. Remember, if you are buying, I've taught you guys, if you're buying, you want to buy at a higher low. Your stop loss should be then at the previous higher low. All right, to give the market room to play around. and obviously based on your risk tolerance, how much are you willing to lose? All right. If the stop loss is too far, or it seems like it's quite a lot of money, reduce your stop loss, reduce your lot size. Reduce your lot size, because nothing hurts than being correct and the market hits your stop loss. You lose, but you know that your analysis were correct. So rather you make small money than lose money. All right, rather you make small money than lose money. All right, this ratio provides a clear and measurable way to assess whether a trade is worth pursuing. All right, stop loss orders are your safety net in trading. Always use your stop losses. All right, are we together? So we have an example of what happened here. Imagine if you took a trade here. Imagine if you didn't have a stop loss. Then what happened? Boom. You were deep in losses. All right. Practical tips for setting stop losses. Use technical analysis. We've already discussed that. It's important to use technical analysis and chart pattern to set effective stop loss levels. Number 2, set realistic expectations. Align stop levels with your risk tolerance and overall trading plans. I discussed that. Avoid emotional decisions. It's important to adhere to predetermined stop loss levels and not allow emotions to override your trading strategy. Most of you move your stop loss further down because you are hoping that the market will reverse, and eventually the market just keeps sinking and you end up losing your money. So if the market has invalidated your setup, allow the market to hit your stop loss. There is always another trade. There is always another trade. They say a gambler thinks that this is the last opportunity and he must win wherever. However, a professional trader knows that there is always opportunities in the market and there's always the next one. But the gambler wants to make sure that this particular opportunity wins. So you make a decision. You want to be a gambler or you want to be a trader. The decision is yours. Let's move on. Trading stop loss is one of the most powerful tools that you can use. Trading stop loss is a powerful tool that adapts to market movements. All right. Advantages of trading stops: it helps you to lock profits during favorable market shifts. All right, monitoring and adjusting trading stop levels is crucial as market conditions change. So you want to use a trading stop loss. All right, as we can see in this example, we took a long position here. All right, market went all the way up. We see that, and then our stop loss was initially at this price. We moved our stop loss there, moved our stop loss there, moved our stop loss there. When the market turned, we closed in profits. All right. Imagine this trade came back to your entry and hits your stop loss, your first stop loss, after having all this profitable, that profitable movement over there. So always trade your stop losses. Okay. I would say the best way to trade your stop losses is use either your moving average or use price action. If you guys understand market structure, as you can see, if you have higher highs and higher lows and you are in a buying position, use the lows. Whenever a market creates another high, use the lows to trade your stop loss. All right. If, for instance, your stop loss was at this low, market moves all the way up, you put your stop loss at that low. The market moves all the way up, you put your stop loss at this low. Market moves all the way up, you put your stop loss at that low. It keeps going up, you put your stop loss at that low. And eventually, if the market turns against you and there is a change of character, you are still in a winning position. I see Michael says, I want to be a professional trader, not a gambler. Gambling really affected me in the past. I am happy for you, Michael, and I'm hoping that as from today, you are going to become a professional trader and apply everything that we are discussing today. Let's move on to position sizing. Position sizing refers to the process of determining the amount of capital to allocate to a specific trade. It's a fundamental aspect of risk management in trading. All right. Risk percentage per trade involves setting a predetermined percentage of your total trading capital that you are willing to risk on each trade. By doing so, you ensure that no single trade can wipe out your entire account. All right. Diversification is a risk management strategy that involves spreading your investment across different assets or positions. It reduces the impact of poor performing assets on your overall portfolio. All right. Now let's get to emotional control, and I want us to engage in this. I want us to talk. I see Michael and Rajesh are the only ones that are more engaging. Let's engage. I see Emmanuel is also engaging. Shout out to you. And for those of you that are engaging, guys, let me just tell you, at the end of this session, I'm going to pick up at least 3 people, and I'm going to give you guys a chance to have a one-on-one call with myself. A one-on-one call with myself where you can ask me any questions, anything related to life, finances, anything related to psychology, anything related to trading. Let's have a one-on-one call, and then let's discuss it. Let's see how we can help you succeed. So let's engage. All right. So let's talk. Understanding the emotional journey of a trader, common emotional states experienced during trading, how these emotions impact trading decisions. All right. Common trading emotions. Common trading emotions. Let's get to it. All right. The fear. We discussed fear, the impact of emotions. Fear can lead to hesitation and missed opportunities. We discussed that. All right. Tell me, how has fear caused you to hesitate and miss opportunities? Greed, the desire for more. All right? Greed can drive excessive risk-taking, anxiety, stress in trading. Anxiety can cloud judgment and decision-making. Overconfidence, the desire for more. Overconfidence can also drive excessive risk-taking. Regret, learning from mistakes. Regret can hinder progress without reflection. All right. Technique to control emotions. I've realized my mistake in risk management, that's position size and stop loss. Great. Happy for you there. I will be happy to have that call with you. Great, that would be great as well. Rajesh, we have fear of missing out. All right, so let's discuss a few techniques that you can use to control emotions. All right, deep breathing exercises. People don't understand the power of deep breaths. Let me tell you something. Let me shock you. Did you know that if you jump in a pool of water and just take a deep breath, breathe in and not breathe out, you will float? They say to save yourself from drowning, just take a deep breath and then your body will float. That's also how you control your emotions. When you breathe in, it's a powerful tool that you can just use every single. Just breathe in. Just husa. Husa. You breathe in, you breathe out. You do breathing exercises. It will help you to control your emotions and calm down. Mindfulness and meditation. We've already discussed that. Setting clear trading rules and sticking to them. We discussed that as well. And I also gave you a strategy that have a trading account that will follow strict risk management rules and have a greed account. All right, it's more like your side chick. I do not promote cheating. I don't promote cheating. Only in trading you can have a side chick. Okay. Have your one account where you follow your rules and stick to them. Have an account to satisfy your greed. And eventually you will learn that greed does not pay. Greed does not pay. And eventually as you grow, you will let go of your side chick and focus on your main wife, which is your strict risk management rules. All right? Risk management rules. All right. I see Michael says around last week I was trading with a very small lot. It was into a very reasonable profit, but I was trying to hold more without setting B and went all the way down to the grave. Michael, stop loss trading. Trailing stop loss, please. From now on, we trail our stop loss. All right. True 1:2 reward ratio is risk to reward ratio is best. If I follow 1:2, I would have 8 profits trades out of 10. I must stick to it from now on. Absolutely. Please do that. I used to do yoga and meditation but stopped because I became lazy. It was very helpful at that time. Please practice meditation. Emmanuel is laughing at me. I don't know why Emmanuel is laughing at me. Yes, Emmanuel, paradoxically, following rules and sticking to it is the best. Absolutely, all right? Use trading journals to reflect on emotion and decisions. Why do you want to journal your trades? Why do you want to journal your trades? You know, it's scientifically proven that everything that you write down, it's easier for you to remember. And you remember the feeling you felt when you wrote it down. Scientifically proven. Go and study it. Everything that you write, it's easier for you to remember. And whenever the same feeling, well, not always, but the same feeling you felt when you're writing that down happens, all right, it will trigger that memory, right? So that's one of the reasons why you have to write everything down. It's the same thing as your vision, your goals. You write everything down, your plans, your ideas, write them down. Why? It's important to write. It's just a rule. It's a rule. It's a universal rule that when you write things down, they usually just happen. But that's off topic. Let's discuss journaling your trades. All right. When you journal your trades, this is the trade that I took. These are my rules. This was my exit. This was my entry price. This is my take profit, my stop loss. These are the results. Why did I take that? You go back, you reflect. Okay, I've taken 10 trades. I've won 5. I've lost 5. This is how I felt when I won this. This is how I felt when I lost. And these were the reasons why I lost this trade. You improve from there. All right, you improve from there. I now realize that I sometimes revenge trade. It's now loud and clear. I am glad I am opening up your eyes. All right. Seeking support from a mentor or a trading community. Again, having a positive trading community or having a mentor like myself, we do mentor people. You need support. All right, you need support whenever you are about to make an irrational decision. You pick up your call, you call your community, or you send a message to your community, or you call your mentor. All right, build your emotion control toolkit. Whatever that means to you, you just need to set rules for yourself where you know I should not allow myself to go beyond this point, because when I go beyond this point, such and such happens. All right. All right. I have recently started backtesting. Good, backtesting is very good. Can you guide me to master this? Yes, we can guide you. Group discussion. Can anyone share personal experience where emotions affected their trading decisions? I'm still waiting for more people to participate. We still have the same participants here. So let us please share our personal experiences. And what strategies have you used to control emotions in the heat of the moment? I've been telling you mine. Please tell me what strategies you have used in the past that have worked for you. I see Rajesh says he used to meditate and it has helped him a lot. What about you guys? What strategies have you used to control your emotions in the heat of the moment? All right. Let's get to it. I'm going to give you guys a minute. To share what strategies you've used to control emotions in the heat of the moment. All right. Now let's move on. For those of you that have not registered with Octa, please do register with Octa. The link is in the description. Register, open your trading account, all right, and log into your profile, find the promo code section, all right, enter the promo code emotion100 and press activate, and then make a deposit, and you will enjoy 100% deposit bonus on your deposit. If you deposit $5,000, you will get $5,000 as a bonus to increase your margin. All right. Portray van Veek. I fell victim to revenge trading a lot, but I'm getting clear from it listening to you now. Awesome, Osa Patre. I walk away from the trading station. That's good. That's very good. And I see why professional traders make it in life, because there's no way a man will be practicing this and he won't be successful in this life. Absolutely, brother. Absolutely. My strategy is actually praying. When I'm scared, I just pray to God. Beautiful. That's one of the most important foundational principles. Pray. Like this is your last day on earth. Pray. All right? Pray. All right, making your first profitable trade. Let's get to it. Introduction, the significance of your first trade and its psychological impact, the guidelines for selecting a suitable asset and entry point, a step-by-step approach to executing a profitable trade, and discussing risk mitigation strategies. All right, let's talk the significance of the first trade. All right, especially for the new guys here. And for those of you that have been trading, share with me your first trade. How was it? Right? How did it feel when you first, I'm sure all of us remember our first trades. I remember my first trade like it was yesterday. The trade that changed my life. The trade that changed my life. I remember, most of you know the story. I've had a very profitable trade. My first trade that I took was a very profitable trade on a USD JPY. I made, and I didn't know what I was doing. It was a lucky guess. I made over 100% profits on that very first trade. Man, I decided that day that I am going to learn the Forex market. And obviously after that, I lost money because I was still learning. But that very first trade, oh boy, I remember it like it was yesterday. Oh, great. If you guys don't know the story, please go watch. There's an interview that we did with, go on YouTube and check the Level Lion show, and check the interview that we did courtesy of Octa. It was a beautiful podcast. I taught a lot about psychology of life. Go and watch that interview as well. So make sure that you learn a lot. Your first trade is not just any trade. It's a pivotal moment in your trading career. All right. Do let me know your first trade memory. It sets the stage for your future experience and has a profound psychological impact. Successful first trades can boost your confidence and provide a solid foundation. Exactly like that's what happened to me. However, losses in your initial trades can lead to self-doubt and hesitation, all right? Understanding the significance of this milestone is crucial for managing the emotional aspect of trading effectively, all right? My strategy is actually, we should do deep breathing. Great. I walk away. I notice that if you master Forex, you'll be able to handle any pressure that comes your way. Absolutely. Trading is a way of life. Trading is a way of life. If you master trading, you can master anything in this life, all right? Emotions play a significant role in trading and can greatly influence your decisions. The first trade is often accompanied by a roller coaster of emotions, including excitement, fear, and overconfidence. These emotions can impact your decision-making process and ultimately affect the outcome of your trade. Managing these emotions is essential for maintaining a disciplined and rational approach to trading. I just want to again just stress this point. When it comes to trading psychology, it's not something that you own. You don't own it, but you master it. You master it by what? Practice. Every single day you get into the market, fear will try and kick in, overconfidence will try and kick in, greed will try and kick in, impatience will try and kick in. But you need to be aware. The best way to master trading psychology is the awareness. Be aware of what is happening to you. When you are aware of what is happening to you, then you can apply the solution. When fear kicks in, you need to know that this is fear now kicking in. Not that I'm afraid, but it's this emotion that's just, I am aware of what is happening to me right now, so therefore I know what to do. It's like if you are sleeping and you wake up. When you wake up, the first thing you need to do is to be aware that you are awake. All right? Does that make sense? You need to be aware that you are awake so you can get out of bed. If you wake up but you are not aware that you are awake, I don't know if you have sleep paralysis. I don't know what's going on. But you need to be aware that you are awake. Then you can wake up. All right? It's like most of the time, if you just get up out of bed and you're not mentally aware, you'll notice that maybe you will fall, or you will, wobble a bit, or you will knock something because you are not fully aware that you are awake. So the same thing is in trading. All of these things that will keep coming to you. However, you just need to be aware of what is happening to you. All right? So that you are able to maintain discipline and rational approach. On Saturday at the seminar, we discussed the importance of discipline. We said self-discipline is self-imposed standards for the sake of a higher goal, right? Self-imposed, so you impose the standards on yourself to say, I will not do 1, 2, 3, and 4. Why? Because I have a higher goal, for the sake of a higher goal. We also went on to say self-discipline is the ability to do what you should do, when you should do it, whether you feel like it or not. The ability to do what you should do, when you should do it, whether you feel like it or not. All right, let's move on. Selecting, we'll get to that now. Let me read the comments. I doubled the funds on the account, withdrew the profit, bought a nice power bank the next day. 2 months later, I was like, the market took me personal. So looking at the power bank, I know it's 100%. Our story is more or less the same. It's more or less similar, Emmanuel. I took out that money, so every single time, even when I went through losses, I knew that Forex trading is 100% real. It works. I just need to master it. All right, my first trade was a loss, and I was afraid to place live trades for 3 months. Demo trading is different from live trading. I definitely agree with you. Demo trading is actually different. Demo trading is more about mastering the skill than the psychology. The psychology comes down to real account, baby. Comes down to you versus the market, you versus you. All right. My first trade was actually a loss. I went into trading without learning anything. I cried a lot that night, but later I was able to make some money to celebrate my mom's birthday. I can't forget. Beautiful. Well done on that. I would actually love to reach out to you personally. You are a deep motivation to me. Is there a way we can reach you personally? You can find me on Instagram, Isaac Izy. Let me just write it down here. Isaac Izy. You can reach me on my Instagram. We are also on Telegram, Octa South Africa Telegram channel. The link is up in the description. Please make sure that you join our Telegram channel. We send out a lot of content, trading psychology content in that group, free signals, everything related to Forex trading we send out in the Telegram channel. So make sure that you join that. Even when I don't trade, I observe the chart regularly to see what's happening and analyze what to do. That is beautiful. That's how you become a master. All right. Selecting a suitable asset. How do you select an instrument to trade? All right. One of the foundational steps in making your first profitable trade is selecting the right asset to trade. Research and understanding of the chosen asset class are paramount. All right. Factors such as liquidity, volatility, and familiarity with the asset should guide your selection process. All right. Identifying your entry point. Timing is key in trading, and identifying an optimal entry point is crucial. Like I said, guys, when you are buying, you need to know when you should be entering your trade. When you are selling, you should know when you should be entering a trade. And I'm going to give it to you right now. If you are buying, you want to enter your trades at your higher lows. If you are selling, you want to enter your trade at your lower highs. Write that down, all right? If you are buying, you enter your trades at your higher lows. If you are selling, you enter your trades at your lower highs. All right, two fundamental approaches to consider: technical analysis and fundamental analysis. We discussed that more. Technical analysis involves studying price charts and using indicators to predict future movements. Fundamental analysis involves assessing the assets' underlying value based on economic, financial, and geopolitical factors. All right, step-by-step approach to ensure consistent success. It's essential to follow a step-by-step approach when executing a trade. 1. The analysis. Thoroughly analyze the chosen asset and the market conditions. All right. The stages to a step-by-step approach to executing a trade. Number 1, you start by analyzing. Oh, for God's sake, analyze. All right. Thoroughly analyze the chosen asset or instrument and the market conditions. Number 2, entry. Identify and execute your entry point which aligns with your analysis. Keyword: aligns with your analysis. All right. Setting your stop loss and your take profit levels. Define clear levels to limit potential losses and secure profits. Monitoring. Continuously monitor your trade to make necessary adjustments like your trailing stop loss and so forth. The risk identification. Number 1, before executing your first trade, it's crucial to identify and understand the various risks involved. I will repeat this again. Make sure you know how much you're going to use per trade. Or make sure that you know that figure. Risk can be categorized into market risk, e.g. price volatility, and personal risk. All right? And then recognizing this risk is the first step in developing effective risk management strategies. Right. Once risk mitigation strategies, once you've identified the risk associated with trading, it's imperative to have strategies in place to mitigate them. Effective risk management is a key component of successful trading. We've discussed this. Strategies include setting appropriate position sizing, using stop loss orders, diversification, and continuous education, of which we've discussed previously. All right. So let's talk now. Let's engage. Learning from real life experiences is a powerful way to gain insight into trading. All right, we're going to share real life examples of first trades, both successful and unsuccessful. These examples will highlight the practical application of the concept discussed earlier and the lessons learned from these experiences. All right, let's get to it. Example 1, successful first trade. All right, a trader, Sarah, thoroughly researched the cryptocurrency market. She identified a strong uptrend in Bitcoin and used technical analysis to pinpoint an entry point. Sarah executed her first trade with a well-defined stop loss and take profit. The trade resulted in a significant profit, boosting her confidence and setting a positive tone for her trading journey. Research. These are your key lessons. 1 is research. Analysis, disciplined risk management can lead to successful first trades. All right, take a screenshot of this. From today, I want you to become Sarah. All right, let's look at what Sarah did. Sarah looked at Bitcoin. She analyzed the market. She see that the market came to test this level over here, which is, again, we are in a bullish trend. This is a higher low because that previous low was that one there. A higher low, she entered the trade, exited there, and she made a killing. All right. Example number 2, unsuccessful first trade. John, a novice trader, entered the stock market without much research or a clear strategy. He bought a popular tech stock without setting a stop loss. Unfortunately, the stock market experienced a sudden downturn due to unexpected news, and John suffered a substantial loss. The emotional impact of this loss left him hesitant to continue trading. A lot of us I like John. We just came into it. No research, no learning whatsoever. Lack of research and risk management can lead to significant losses, emphasizing the importance of preparation. This is what John did. John bought Apple. John bought Apple. Apple didn't go up, it went down. Oh, shucks. John lost money. Lesson number 3, or example number 3. Lisa, a new trader, decided to diversify her portfolio in her first trade. She spreads her capital across different asset classes, including stocks, Forex, and commodities. While some of her individual trades had mixed results, her overall portfolio remained relatively stable. Diversification helped her minimize her losses and maintain a positive outlook on her trading journey. Key lessons. Diversifying across multiple assets can reduce the impact of individual trade losses. Let's move on. Let's see. We see she invested in Apple. She also invested in gold. Apple went against her. Gold went in her favor. You see that? Diversify. Example number 4. Learning from mistakes. I see we are running out of time. I'll try to be as fast as I can. But this is important, right? This is very, very important. And I urge you, after this session, come back, rewatch it again, and again, and again. Repetition, repetition, repetition. All right. Michael executed his first trade. Michael Samuel, we're talking about you now. Michael executed his first trade impulsively, without proper analysis or risk management. He incurred a loss, but rather than giving up, he used it as a learning experience. Well done, Michael. Well done, Michael. Michael went on to educate himself, refining his trading strategy, and practiced with the demo account. His subsequent trades showed significant improvement, and he eventually became a successful trader. Key lesson: mistakes can be valuable if you use them as an opportunity to learn and grow as a trader. Well done, Michael. Well done. And I hope for each and every one of you who was like John, let's be like Michael. Even though we were bent, let's use our losses as as learning curves. Let's use our losses as school fees that we pay. All right? That we pay. Oh, good. Let's move on. Michael traded without risk management. Refined his trading strategy. Beautiful. Isn't that amazing? I will watch this video at least 10 times until I don't get it in my head. And heart. You guys are actually talking about me. Yes, Michael, we are very proud of you. Conclusion. Let's recap on the key takeaways. The significance of your first trade. Your first trade sets the tone for your trading journey and can have a profound psychological impact. Be aware of the emotions it may invoke. Selecting a suitable asset. Choose the right asset after thorough research, considering factors like liquidity, volatility, and your familiarity with the asset. Identifying key points. Master the art of timing by employing technical and fundamental analysis to identify optimal entry points. You need a step-by-step approach. Follow a structured approach that includes analysis, entry, risk management, and ongoing monitoring to enhance your chances of success. Risk identification and mitigation. Recognize both market and personal risk to develop strategies to mitigate them effectively. Learning from real life examples, real life trading experience, both successful and unsuccessful, provide invaluable lessons that can shape your trading career. All right. It's amazing because this is what I'm actually doing presently. Beautiful, beautiful. I'm doing this now. Great. Conclusion: with this insights and knowledge, you are better prepared to embark on your trading journey with confidence. Remember, trading is a continuous learning process, and each trade is an opportunity for growth and improvement. I will say that again. With this insight and knowledge, you are better prepared to embark on a trading journey with confidence. Remember that trading is a continuous learning process, and each trade is an opportunity for growth and for improvement. Remember to use the promo code again, emotion 100, to double up your deposit. And this is how you use it. You open the Octa Trading app, visit the official website, log into your profile if you have one. If you don't have one, click the link in the description to open up your trading account with Octa FX. Find the promo code section in the side menu, enter the promo code emotion 100 and press activate. Make a deposit and enjoy your bonus. It's really been an amazing session today. Before we round it off, I just want to see that you guys were listening, paying attention. We're gonna do a quiz, all right? We're gonna do a quiz, and I'm gonna ask a quiz, and whoever gets it right, like I said, I'm going to choose top. Whoever gets every one of them right, there's about 4 or 5 questions. Whoever gets all 5 of them right, the first 3 people who get them right. So please make sure that you answer as quick as you can, because I'm only taking 3. They're gonna have a one-on-one call with myself. All right. So you first have to answer all of this correctly. 2, you have to join the Telegram channel. And then the first 3, you will send me a message on Telegram. And then I will write your names on the Telegram channel. And then we will, and then we will then, oh boy. My phone is dying right now, but okay. Which of the 4 is not a psychological challenge in trading? All right, that's question number 1. Question number 2 is, why is risk management crucial? Why is risk management crucial? All right. Why is risk management crucial? Those are your options. All right. Guys, my phone is gonna die, and this is where I am checking my the comment section. Can you guys just give me 1 second? I do apologize. Let me just get my charger quickly so I can get all your answers. I got my charger before this switches off, so that I can be able to identify all my winners here. All my winners. Why is risk management crucial? Okay, I believe you all answered that. What are the 4 common trading emotions? You can choose over there which one is correct. All right, and then we're gonna come back and do answers. What are the 4 common trading emotions? What are the 4 common trading emotions? What are the 4 common trading emotions? This thing takes like medicine. It is medicine, it's bad. All right? Why is it important to have a trading plan? Why is it important to have a trading plan? Why is it important to have a trading plan? Why is it important to have a trading plan? Is it A, it looks professional? Is it B, it helps guide decision making? Is it C, it guarantees profits? Is it D, it's a regulatory requirement? Why is it important to have a trading plan? All right. Question number 5, which is our last question, and then we're going to go back and then I'm going to choose our winners for tonight. What is the primary purpose of setting trading goals? What is the primary purpose of setting trading goals? To impress other traders? Is it to have something to talk about? Is it to provide direction or motivation? Is it to eliminate risk? Is it to impress other traders? Is it to have something to talk about, to provide direction, or to eliminate risk? All right. Let's go back. Let's see who is our winners. The first person to get question 1 right was Rajesh. Which of the 4 is not a psychological challenge in trading panic attacks? It's not a psychological challenge in trading. Rajesh got it right first. Number 2, why is risk management crucial? Why is risk management crucial? Maximize profitability? No. Achieve consistency? Only no. The first person to get it right was Rajesh again. All right, so we have Rajesh is actually our first winner. Congratulations, Rajesh. You have been active. You have been interacting with me. You are the first person to win a one-on-one session with myself where you can ask me anything you need to know. First, join our Telegram channel. You can contact me from there and let's take it from there. Number 3, what are the common trading mistakes? Is it fear, greed, anxiety, and overconfidence? Is it greed, anxiety, panic, stress? Is it anxiety, fear, paranoia, overconfidence? Or is it none of the above? The answer is none of the above. None of the above. None of the above. That's the answer, all right? That's the answer. The first one, I see a lot of people said A, right? Or Mereki was the one to say D first. So Mereki was the first one to get it right. And then why is it important to have a trading plan? Why is it important to have a trading plan? It helps guide decision making. It helps guys decision making. Mereki Makume is the second person, is the first person to answer this one right. Congratulations, Mereki Makume. Congratulations. You have won yourself a one-on-one session with myself where you can ask me anything related to Forex trading, and then we can do a Skype call, a Zoom call, or a Teams meeting, or even a WhatsApp call. All right, congratulations to Mereki Makume. The answer is it helps guides decision making. Question number 5, which is our last question. What is the primary purpose of setting trading goals? What is the primary purpose of of certain trading goals. The first person to get it right was Rajesh already. There was Emmanuel. Was it Emmanuel? Or as Michael, it helps guys decision making. It helps guys decision making, right? To provide direction and motivation. All right. The answer is to provide direction and motivation. All right. Unfortunately, Michael, unfortunately, the the people that were too interactive in the session was Rajesh. It was Mereki, he's already won, and Michael as well. Michael has been very Michael and Emmanuel were very interactive as well. So Michael and Emmanuel, both of you have also won a chance to talk with me one on one. Follow the link above and join the Telegram channel. Contact me, let's set them up and let's talk. Congratulations to all four of you: Rajesh, uh, Mereki, uh, Emmanuel, and Michael Samuel. Congratulations to the all four of you for winning a one-on-one session with myself, where you can discuss. You can have a Skype call. We can have a what you call. We can have a Zoom call, or any what you call, any medium of communication that you prefer. Let's talk. Congratulations to you all. And let's, if you guys have any questions pertaining to what we were discussing today, please, now is the time. Now is the time. You have about 5 minutes to ask any questions. If you have any questions, please do ask me. Let's talk. Feel free to ask your questions pertaining to trading psychology. Let's go. Let's go. Where is the link? The link, moderator, please send the Telegram link one more time. The Telegram link is actually in the above, in the moderator. Can we please have the Telegram channel link in the comment section? But if you guys just go above in the comment, you will see it. Can I just ask that we get the link one more time? All right, I don't see any questions coming. I presume that you guys understood everything that we discussed today. I just want to again urge you guys and plead with you guys to please go back, watch this session one more time. Watch it again and again. Watch it again and 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 again until it's instilled in your mind. Repetition, repetition, repetition. All right. So great. I have joined it. Stellar Trading. Absolutely. That's the one. That's the one. That's the one. I'm going to write your names. In Stellar Trading, let me say congratulations to our winners. To our winners. Let me just write that down. Congratulations to our winners. Rajesh, it's Rajesh, it's Mireki, it's Michael, it's Emmanuel. Please contact it. Please comment in the comment section. section, and you will be contacted for more details. That's right. I've written that in the group, so make sure that you are there. The link is there. Great session, guys. God bless you. God bless you greatly for what you're doing for us. I thank you so much. When is the call happening? Let's do it somewhere next week. Let's do it somewhere next week. But today, it's actually Tuesday today. No, we can do it this week. I thought today is Thursday. We can do it this week. Let's start talking as of tomorrow. Please make sure I've written a message in the group. Go and comment there. Rajesh, Michael, Mereki, and Emmanuel, go comment there, and I will contact you guys, and then we can set an appointment. That's it from me, guys. Hope you guys had an amazing session. It was really lovely talking to you guys. I hope you guys have learned quite a lot today. Have a great evening, guys, and have a great profitable week. This is our last webinar for the year on YouTube. However, we have our last live trading session on Telegram on Thursday, this coming Thursday, the 14th of December, 7 p.m. Central African Time. We will be trading live with myself on Telegram. Make sure that you join that as well. Fund your trading account because it's going to be a massive trading day. Let's get those sniper entries. I will see you guys on Thursday. That's our last live trading session for the year. We will resume next month. A blessed Merry Christmas to you all and a prosperous New Year. I wish you guys all the best for the coming year, all the success, all the profit that you want, more money in your pockets, more money in your bank account, more wealth, more health, and most importantly, more peace. I love you guys so much. Thank you guys for spending time with me. Have yourself a blessed evening. God bless you. Jesus love you. And I